What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Netflix, ticker symbol NFLX, on a variety of time frames in anticipation of tomorrow's trading day, Monday, January 29th. Well, Netflix on Friday, finishing the day up about 8.5 points, 1.5%. Here on the 1 minute chart, we can, take a quick look. Not a ton of intraday scalp opportunities, at least from a perspective that I would personally trade on, looking for provable and predictable statistical edge. Let's look at the 5 minute and just get a little bit more context here. You might have had a few traders trying to play off of the 20 period EMA. Not clean enough in particular for me, but let's look toward tomorrow by looking at the most popular psychological and technical indicators, again, self-fulfilling prophecies, right, on the 30 minute, 4 hour, and daily charts. Now, understand that when we're looking at these charts, we're not doing so ever with the idea that somehow indicators are magic, right? You'll notice a really, really big consistency with me across, the regular channel, the main channel, and this channel. I look at TA as a psychological self-fulfilling prophecy. Meaning, I want to look at the ones that have the most eyeballs, the indicators that have the most eyeballs, and pretty consistently, that's going to be, from a more zoomed out perspective, like the 30 minute, 4 hour, and daily charts, that's going to be the 50 and the 200 moving averages, right? On a more intraday perspective, the volume weighted average price is incredibly common, and it's measuring something real, okay? I'm a big fan of the volume weighted average price, and then I also utilize the plus and minus 2 standard deviation bands because they are also heavily watched. And you'll notice that a lot of stocks trade off of those levels if you watch enough stocks. But it's also a visualization of that rubber band effect, that snap back to equilibrium, if you find clean enough setups on liquid enough tickers. Of course, it's not going to work on even the majority of stocks each day, but we're just after the ones that is respecting that rubber band effect on that particular day. And listen, that's just one concept, one strategy in the playbook. But back to Netflix here. This is the 30 minute, so that white line is going to be the 50 period moving average, okay? And you can see that level's been respected as pretty decent support. I would have preferred to see more tests, okay, to call it such, but it has been for the last, 4 trading days here. Really since heading into that earnings report, okay? Since then, we saw a pre-market test on Thursday, an intraday test on Thursday, heading into the close, and then that's really all we've had up until this point. So moving forward on the 30 minute, remember, always looking at multiple time frames, as many as possible. I like to look at the 30 minute, 4 hour, and daily when I'm looking at day-to-day concept ideas, such as this video, okay? Looking ahead to tomorrow. But specifically here on the 30 minute on Netflix tomorrow, I'm paying very close attention to that white line, the 50 period moving average, looking for, from a bullish perspective, a test and hold if we see a test at all. Obviously, the bulls are going to want to see that hold, similar to what we saw on Thursday. That was a beautiful case from a bullish perspective. If you're a bear, okay, when we're unbiased here, I'm just laying it all out. If you're a bear, you want to see that thing snap downside, ideally break downside, retest, reclaim it as resistance, and fade. Okay, let's look at the 4 hour now and see if we can get even more context. Now, listen, the problem here with the 4 hour is this move has been so aggressive in favor of the bulls after that break of 500 on the earnings report here on Netflix. The 50 period and the 200 period have not had enough time to catch up. So that being the case, I'm not just throwing the 4 hour out the window, right? Because that 50 period is above 500 now, approaching 510, but I'm keeping it on the back burner, just paying a close attention. From a bullish perspective, ideally, you'd like to see that 50 period move upside as quickly as possible, form kind of that potential safety net. If you're a bear, though, you want that thing to take its time, leave as much space, between the current stock price and that next potential highly watched area of safety net, let's call it. On the 4 hour chart, you want that down as long as possible. So right now for me on Netflix, the 4 hour, I'm watching it. It's in the back of my head, but it's on the back burner. It has to be. Okay, just because there's not a lot of heavily watched indications on that chart right now. Now here on the daily chart, again, similar story, of course, even to a more intense degree. You have the 50-day at 480, the 200-day at around 418, 420. Those are going to take its time. The daily chart, you know, it's a longer time frame chart. These things take longer to catch up to big moves. And we understand that here on the daily chart. So here's what we're looking at. Let's start with the bulls here today. From a bullish perspective, you know, we are very clearly kind of right in the middle of two psychological regions. What are those? 550 to the downside, 600 to the upside. Now, listen, granted, 600 currently is approximately almost a 5% move. But right now, the bulls are looking toward that 580 recent high. A break of 580 and a retest and a claim opens up potentially a quick test to 600. If you're a bear, you know, you don't want to see that recent high that we saw on Friday, 580 approximately. You don't want to see that break. You want to see us fade from here. Even if it means a retest of 580, just fade, make our way back down closer to your end of the channel near that 550 area. We may be getting ahead of ourselves, but if you're a bear, you ideally want to see 550 break downside, you know, and then you might have some bears thinking all the way of a test to back to 500 a share, which is of course a huge level, but can't get too ahead of ourselves, right? Because there's three more things I need to show you to wrap this all together. First of all, volume. This big recent move since earnings, the volume has of course been higher than average, but even more so than just like higher than average, right? A big chunk of the market, consecutive green days, is agreeing on this move. If a move is in your favor, you want to see the volume ideally as high as possible, at least to a somewhat sustainable degree. Okay, and we've been averaging over 10 million shares a day. You can almost argue 15 million, but I'm kind of removing this giant day of 25 million plus. You want to see as much volume as possible when a move is in your favor. Big sample size, agreeing with your sentiment. Okay. But bears, if the stock continues upside, you know, ideally you want to see that volume start to fade a little bit. And bulls, if the stock fades from here, you want to see that occur on low volume. Implied volatility. Okay. This is not only incredibly important if you're trading options, but also just if you're tracking the stock, see how it tanked off earnings. Very common. That's implied volatility, IV crush. Okay. Not only does that crush a lot of options purchasers, at least some of the value in their contracts that's priced in through the Greek Vega, but something really interesting about implied volatility, if you think about where it actually comes from, it's coming from the options chain. The lower IV gets, okay, I like to think about it this way. The more comfortable the options traders, the less insecure about the current price they kind of inherently are, correct? Because they are literally pricing in less volatility. And if you're bullish and the stock is ripping upside and IV's tanking, even if it's just immediately after an options volatility event more so, like earnings, you know, that factor considered on its own, that would be a positive factor in my head. The options traders are less insecure about the current price, and the current price is higher. Okay, speaking of options, let's take a look at the chain, get some kind of concept of what the options traders are thinking as we head into Monday. All of this data, of course, being from Friday. Big sample size, 677,000 total contracts traded. But look at this ratio. It's ridiculous. Nearly 65% calls on Friday, 438,000 calls, 239,000 puts. If we look at the short-term speculators, the 0 to 20 delta, 155,000 calls approximately, 140,000 puts approximately. So it's more weighted to the bullish side if we consider overall call put ratio. But even in the very short-term data, the most short-term data that we can get here out of the options chain, we're relatively evenly matched, but still slightly weighted to the bullish side with the short-term speculators. A little bit more volume on the call side. Hope you guys are enjoying the new channel here. If you are, please subscribe. Helps out tremendously. Maybe even leave a like on the video. Helps out a ton with the YouTube algorithm, and I greatly appreciate it. I'll see you in the next one.